We can start with the AMA about 30 minutes in.
Awesome. Let me start sharing my screen. I've got a small presentation for everybody.
Great.
Can you guys see my screen now?
Yes, there you go.
Okay. So as Emma mentioned, I'm Wade. I lead marketing and community at Opyn. Brief overview of my background. I started my career in traditional finance, trading equities and options for Merrill Lynch for about 3 years. Then I moved abroad to be a consultant in Argentina, and through a series of side projects, got further and further involved in building online communities and crypto. And I joined Opyn about, in December, so a little over 7 months ago, almost 8 months. And have since joining, we've launched one version of Opyn, and then we did a full rebrand. So the purpose of this presentation is to give you sort of an overview of what Opyn is, how you can use DeFi options to both speculate and to protect your portfolio, and then can kind of give everyone a walkthrough of what the Opyn platform looks like. And Emma, how does this work in terms of like people asking questions during the presentation, or should I just go through everything and then at the end we can ask questions and answer them? Okay, well, I'm just gonna start going through the presentation, and then we can have the AMA at the end. One thing I do want to note is like there's going to be a shit ton of buzzwords and words that you might not know the definition of. But please, like, don't be intimidated by them. I'll do my best to explain them. But one of the things that I've noticed in DeFi is that users are intimidated by options, and therefore they don't trade them. And like they're really not that difficult to understand, and if you learn the foundation of them, you can use them to make money in any market condition or to protect yourself. So without further ado, I'll jump in here. This is just kind of a brief definition of what Opyn is. Opyn is a capital efficient DeFi options protocol that allows users to buy, sell, and create options on ERC20s. If I'm explaining this to my mom, I'm telling her that Opens is an options platform where you can buy options on any crypto asset. Although right now on Opyn V2, we only have ETH and BTC options. But as I mentioned, DeFi users use Opyn to protect themselves against DeFi risk and also take speculative positions on different cryptocurrencies. Noting that this is Web3 Fashion Week, I wanted to give everybody an idea of what Opyn's branding looks like. We rebranded a few months ago, and as you can see, there's a lot of like Greek theme across the landing page, and the reason for that is that Greeks are I don't want to explain this. Greeks are a way for options traders to understand the risks and prices associated with different options. The main ones are delta, vega, theta, rho, and gamma. So when we were thinking about rebranding Opyn, given the Greeks are such an inherent part of DeFi options, we wanted to make that basically the cornerstone to the new branding. And the neon colors are more of a indication of like crypto futurism. So when I get into the options chain and the website later, I'll show you those. But given this is fashion, Web3 fashion presentation, I wanted to give everyone an overview and like a little background of why Opyn looks the way it does. So what the fuck are options? Options give you the buyer the right, but not the obligation to buy or sell an asset at a given price on a certain date. And I know that's a lot of buzzwords, so let's take a look at an example. There's two types of options, and I'll get into these in more detail later, but there are put options and call options. put options give the buyer the right to sell an asset at a certain price on a day in the future. And you can kind of think of put options as a form of insurance. So to make this example a little bit more concrete, let's say ETH today is trading at $3,000 and you're worried about downside, volatility, or a flash crash. You can buy a put option. And if the strike price on that put option is 2,500, no matter where the ETH is trading on the expiration date, you have the right to sell ETH at 2,500 on that date. So extrapolating that syntax a little further, if the price of ETH in that example falls below 2,500, you can still sell it at 2,500 on the expiration date. And these are key terms to remember. One is like ETH is the underlying asset. That's what you're trading the option on. The strike price represents the price at which on expiration, especially for a put, you have the ability to sell ETH at that price. The expiration date is the date when the contract expires. And I think the key theme for options is that you have the right to exercise it, but not the obligation. So if the price of ETH in this example is above 2,500, like you don't have to exercise it because it's not in the money and it wouldn't make you profit in doing so. So again, I think from a put options perspective, you can think of it as buying a contract that serves as a form of insurance for your crypto assets. And the different types of options, I've kind of touched upon this, but a put option gives the right but not the obligation to sell an underlying asset at a strike price. And a call option gives you the right to buy the underlying asset at a specific strike price. So a call option example, I'll get into in a little bit, but first kind of just wanted to talk about like reasons to buy and sell call and put options and show a few graphs that might make this a little bit easier to understand. So if we want to take a look at selling a put option, the main reasons you would sell a put option is because you think the price is going up. And when you sell an option, somebody is paying you an options premium, which is like your form of income for selling that option. So when you sell a put, you're making a bet that the price of the underlying asset is going to go up, and therefore the option is going to expire worthless, and you can take that entire premium as profit. Another reason to sell a put option is because you think implied volatility is going down. And implied volatility is more or less the market's forecast of a likely movement in the underlying assets price. High implied volatility means that options premiums are higher, and low implied volatility means that options premiums are lower. So looking at this chart, if you sell a put option, the maximum amount that you can gain is this area here between the options price and the strike price. So the premium is like what you will earn from selling this. And then if the option reaches the strike price or goes below the strike price, that's the money that you will like lose out on. And again, like the reason you would sell a put option is because you want to earn yield. And let's take a look at reasons you would buy a put option. This is probably the easiest example to understand. But if you're worried about the price of ETH dropping from 3,000 to 1,500 in the next like month, then you could buy this put option to make sure that no matter what, you have the ability to sell the underlying asset price at the strike price at any point in the future, no matter where ETH is trading. So as I mentioned in the previous slide about selling a put option, they earn a premium. If you buy a put option, you have to pay a premium for that insurance. And again, like the two reasons you would want to buy a put option are because you think the price of the underlying asset is going to go down, i.e., a flash crash with ETH, or you think the implied volatility of that option is going to increase, which basically means like if you buy the option now and implied volatility increases, you'll be able to sell the option for a profit to somebody else in the market. And this payoff by diagram basically shows you like right, this red line is the premium you pay for the option. And as the price of ETH goes down, you start to become closer and closer to break even. And then once the price of the underlying asset goes below the strike price, you start to make money. And the maximum amount of money you can gain by buying a put option is if the underlying asset goes to zero. So, like if the price of ETH, if you buy a put option with a strike price of 2000, the most you can make on that is $2,000, which would imply that the price of ETH goes to zero and you're still able to sell your ETH to somebody else at $2,000. So, um, yeah, I would think of buying a put option as a form of insurance, which I think, given the volatility and riskiness of crypto, probably the best use case for retail traders is to like occasionally buy put options when you're worried about the price of ETH dipping. Um, the other type of option is a call option, which gives the buyer the right, but not the obligation to buy the underlying asset at the strike price. So, an example is if I think the price of ETH is going to go to 4,000 in the next couple of months, but I don't have enough money to buy one ETH outright, I can buy a call option, which gives me the ability to buy ETH at a certain price. So I could buy a call option with a strike price of 3,000. And no matter what ETH is trading at, let's just say a month from now, like I hold this contract that gives me the right to buy ETH at 1,000. So if ETH goes to, let's say it goes to 5,000 in 1 month, like I can exercise that option at expiration and somebody has to sell me ETH at $3,000 and I can instantly go to the market and sell it for $5,000, meaning I've just made a $2,000 profit on that position and I only had to pay a small amount for that premium. So it's a way to gain upside exposure in an underlying asset without having to actually buy the asset outright. Um, and the two reasons you might want to buy a call would be you think the price of the underlying asset is going to go up, or you think implied volatility is going to go up, which would mean you could sell that particular option before expiration in the market and gain a profit. Um, so this payoff diagram kind of like breaks everything down visually. You pay, if you're buying an option, you pay a premium, which means like, let's just say you pay $100 for this option premium. And if the strike price is 25, you don't make money until the underlying asset reaches the price of 25. And even if the price of that asset goes to $25.50, you've still lost money on this trade because you paid more for the premium than you like the difference between the strike price and the underlying asset. But as soon as you reach the break even point, you have the ability to earn infinite profit because ETH, like the price could technically go up forever. So that's why buying call options is such a great opportunity, is you can participate in all the upside for that particular asset for a very small premium. And the maximum amount you can lose is the price that you pay for the option. Looking at the other side of the trade, if you sell a call option, people generally do this to earn yield. So if you think the price of the underlying asset is going down, Like if ETH is trading at 3,000, I could sell a call option with a strike price of 3,500. And if ETH goes down to $2,000, I end up earning money from the premium, and it's I don't take away any of the upside in that call option. So that's one reason why people sell call options. Another is because they think implied volatility is going down. So you would sell the option, and then if implied volatility goes down in the future, you can buy that option back cheaper in the future to close out that position. Um, and one thing to note about selling call options, just as I mentioned with buying call options, your upside is unlimited. If you sell a call option, you are exposed to unlimited risk. So the price, if you sell a call option with a strike price of 4,000, and ETH continues to go up and up and up, like there's no theoretical end where that price movement could stop. So you're exposed to unlimited risk. And a lot of ways people mitigate this is they'll buy one underlying asset. So you'll buy one ETH and then sell a call option with a strike price at 4,000, which means like you're giving up all the upside after that particular price moment in exchange for the premium that someone pays you for selling that option. Um, and to kind of just like recap of everything we've talked about, the most basic form of options, like put options allow you to sell the asset at a specific price, which is the strike price, and you would buy a put option when you think or fear that the asset price would go down. It's basically a form of insurance. And a call option gives the option buyer the right to buy the asset, such as ETH, at a specific strike price. And people typically buy call options when they think the price of the asset is going up, but they don't either have enough money to buy a full ETH, or they don't want to like lock that capital up in one ETH. Um, it's also important to note that the opposite of buying a put is not buying a call. Even though one contract gives you the right to sell an asset and the other gives you the right to buy an asset, there's two sides of each like option, because for every person that buys a call option, there has to be someone selling them that call option. Um, so if you buy an option, you have to pay a premium to get the optionality. If you sell an option, you're getting paid a premium to take on the obligation. So that's a really important distinction for people that are learning um, about options. And in terms of options versatility, one thing that I think traders or people in DeFi fail to realize is that options give you the ability to earn money in any market condition. Because if you think the market is going to be flat, you can sell options that have strike prices that are out of the money, and you'll continue to earn premium during this time. If you think the market's going to go up, you could buy a call option or you could sell a put option. If you think the market is going to go down, you could buy a put option or sell a call option. And you can use combinations of calls and puts to make more sophisticated options bets. I won't go into those, but um, one of the main reasons why options are so popular in traditional finance, and I want to say the options market in traditional finance is like a $300 trillion market, um, are because these options are so flexible and allow large traders to protect their assets. It allows other traders to make huge bets on the direction of an asset without committing all of their capital to like one like trade. You only have to pay a fraction of that underlying asset to buy the option. So like that's probably the main takeaway that I hope everyone comes away with this from, is that like options, like there's a use case for options in any market environment. Um, and like the trades don't need to be that sophisticated. Um, I'll give a quick overview of like the Opyn platform, and then we can jump right into questions. And I know that listening to this, there's been a shit ton of buzzwords, um, and like there might be some confusion. So I'm looking forward to answering any of those questions. But let's take a look at it in practice. This is Opyn's homepage. We've got probably the most important statistics displayed right here. So to date, we've almost done 1.2 billion in notional volume traded, and that's the most of any DeFi options protocol. Shout out to Ribbon, because the majority of the volume from the Opyn options protocol has come from Ribbon Finance. So I definitely recommend checking them out. Opyn was the first protocol to launch options. So to date, we've had almost 27,000 options trades. And these, again, are some of the reasons why DeFi users would want to trade options. They can hedge their positions, which is another word for protecting their positions. You can earn yields and income. You can use leverage, which is, if you're buying a call, only having to put up a fraction of your collateral to pay for the premium implies leverage. And then what I've been mentioning is that like the flexibility of options allow, you can literally trade in any market condition and make money. Here's an overview of the Greeks. I won't go into detail about these, but if you're interested, you can come to the Opyn website and learn more about them. But the Greeks were the basis of the rebrand. Also want to show you quickly a bunch of the integrations that Opyn has built on top of it. Ribbon Finance was a protocol that they basically took options and made them less complicated for users. So they structured them into these vault products that automatically trade option strategies for you, and you can earn yield on those strategies, which is the same thing with Fontis Finance. Staked Out just launched an automated option strategy. And lastly, if you want to get into trading options but are intimidated by the options chain, Ziku Finance is a interface that is a very simple way to understand like which option you should buy. Let me show you the options chain quickly. If you were to trade options on Opyn, you would come to v2.opyn.co, and this is the options chain that you would look through to see if you want to buy or sell any options. On the left side, we have calls, and on the right side, we have puts. And right now, it looks like there are only 2 expirations. So you can buy options that have an expiration date of December 31st, or options that have an expiration date of August 27th. And I know there are a bunch of market makers that are going to be adding new options soon. So this order book will have a lot more selection. But if you were to buy an option, you would click on the ask, which is what someone is willing to like accept for the options price. If you wanted to sell an option, you would click on the bid, which is the amount you would earn if you sold an option. So if you wanted to sell an option right now, there are orders on the order book for someone to pay you $339 to sell them a $2,800 ETH call. And this chart up here shows you the different price fluctuation of the options that have been traded for this particular series and expiration. And with that, I'll kind of open it up to any questions. I know there was a lot of rambling there, so hopefully a few people are still with me. But yeah, does anybody have any questions?
Yeah, thank you, Wade. I've got a number coming through, so I'll read them out. The first one is, a really important question. Will options trading be simplified for new crypto users? So, as you kind of said, there's a lot of new words and complex methods when people are learning about options or how to actually trade them, set up a strategy. What do you think maybe is the most important things? I know that you touched on a number within your talk and presentation, but for a new user coming in, to really simplify and break it down, what are probably like the 2 or 3 core points that they could take away from it?
Yeah, I think if you want to dip your toes in options trading, there's 2 avenues you could go down. There's this Ziku Finance interface that basically is a series of questions that allows you to arrive at an options position. So you start, I already answered the first question, but it's like pick an asset. Let's say we're going to pick WETH. Do you think it's going to go up or down? So if I think it's going to go up, I'll go to the next page, and this has like, okay, like how far do you think it'll go up by this expiration date? So if I think ETH is going to go up above 3,900 before Friday, these are the options that I like could buy. And once you click on it, you have more insight into what the break-even price would be, what you would pay for that option, and then what the strike price of that option is. That's one route. The other route, which is, in all honesty, probably a little bit easier, is to check out a Ribbon Finance or a Stake DAO to like deposit funds in a vault that automatically does the option strategy for you. So to give you like a quick overview of Ribbon, if you wanted to deposit ETH into this YVUSDC put selling vault, like the yields right now on this vault are about 33% on your ETH deposit. So all you would need to do is deposit ETH, and then the rest is taken care like for you. So the like Ribbon team right now would select the strike price for you, and then sell the options on your behalf, and then you would earn the premium. Ribbon's about to launch V2 that automates this process even further. But for the sake of the user, all you would need to do would be to deposit your money in a vault in the same way that you would deposit money to yield farm. But like that's probably the easiest way to get involved with options trading right now, and to like understand the strategy, talk to a bunch of other users and either the Stake DAO or Ribbon community that can like educate you. And once you can understand the strategies and like actually see that it's earning money, that's when you can be a little bit more personalized with your own strategies, selecting your own strike prices, etc.
Mm-hmm. And maybe a little bit more on that and going deeper into strategies, because myself personally, I have a really rich background in options. So before starting DigitalAX, I actually traded variant swap strategies
Nice.
and set up options contracts for Bitcoin on Deribit and Ethereum, but really came from that background. So I was trained by the London Whale. You might know him from your background with Merrill Lynch, but he was the kind of under the CIO office with JP Morgan from 2002 to 2012, and there was kind of a whole drama, I would say, with Jamie Dimon, wanting to buy back the JP Morgan shares at lower prices, and he was part of that. But he actually set up pretty much, he hedged the entirety of JP Morgan's books between the GFC and between 2002 and 2012, and it was really a large part of this was setting up variant swaps, so using options contracts to have a spread on puts and calls, and then rebalance that daily around different strike prices. So I'm really familiar with that, and I know that's kind of my personal love with options. Awesome. Is that whole idea of non-directionality, that you don't have to choose, do you think this is going to go up or go down? Because I think that's a really important point to emphasize for new people coming into this, is that when they think about setting up trading strategies, it's all usually, okay, you have to take a directional bet on the market. You have to, have conviction that this is going to go up or it's going to go down. And usually if you choose the wrong way and you're not really savvy about certain meta knowledge, then you can get yourself in kind of tricky situations. But with options, you can literally, set up puts and calls around a strike, and you can rebalance that daily. And it really does allow you to maximize upside exposure or convexity, even when there's these larger market crashes. So coming kind of full loop on that, and as you would know, options is usually associated with like black swan events. Okay, well, if there's going to be a large market crash, and as a black swan, it's like you have no idea when it's coming. Remove kind of time as a factor. How can you have this trade or this strategy set up so even if the market takes a really large downswing, you can still benefit, you can still actually profit or gain from that, which is something really incredible. So with that said, I mean, how important do you think it is for new users, new options strategy, or people coming in and setting up option strategies? How important do you think it is for them to, I guess, have more of a broader meta knowledge, that rather than just setting up, say, a vanilla put or a call, there are different strategies that can actually go into this, and they can be more complex. But once you start to know them, or you can automate them, like you said, through protocols like Ribbon Finance, that's really where more of the alpha is, I would say. How should people approach that? Really understanding more about the strategies and the meta knowledge around it.
Yeah, no, that's a really great point. And I didn't get into some of the more, I guess, intermediate or advanced option strategies, but you don't just have to take a directional bet. Once you understand the fundamentals of what it means to buy and sell a call option, what it means to buy and sell a put option, you can combine these options to create spreads, to create straddles, and those are some options terminologies. But you effectively can create these bands where you earn a profit, or create other bands where you don't lose any money after a certain point, because you've both bought and sold a call option, or you're pairing calls and puts together to create a structure that allows you to safely trade within a known price range. And that way you're not exposed to these black swan movements that a lot of people aren't prepared for, or that are too hard to actually bet on the timing of.
Yeah, no, I think that's a really important point. And just like you put it, you can literally set up a trade or a structure. So before you go into it, what is exactly your downside, where does it stop, where does it cap, and then also what's your upside potentiality? Like, do you have a cap on that, or is it kind of sky's the limit depending on where the market goes? So yeah, I mean, anyone listening in, these are really interesting concepts, and definitely something that if you're finding this talk interesting, jump into the Opyn Discord as well, and learn more about kind of the different protocols building on top of their infrastructure, like Wade mentioned, Ribbon Finance, and kind of being able to automate a lot of these strategies, because options really are, once you kind of know even just the basis of them, you realize that that's kind of all that maybe you really need to know in terms of setting up trading strategies, because they just allow you so much flexibility, so much affordance to come into the market and really kind of set your base or your ground before just making a bet and thinking, wow, okay, let's hope that ETH or Bitcoin or whatever continues to go up. But so you can take a step back and kind of think, well, let's set up a structure around that. So there's a few more questions. Another one is, how is someone going to be forced to buy out a call option, buy back a call option for more when they haven't really put in much for it? So what happens if the asset tied to their buyout option falls?
So let me make sure I understand this correctly. It's what happens if, from someone who sold you an option, if the price moves against them, how are they going to cover the price movement and enable you to profit?
I believe that's what it is saying. Yeah. I
Okay.
can verify though, but yeah, I know, I'm pretty sure that's what it is.
Yeah, no, at the most basic level, options in DeFi until a few months ago were needed to be fully collateralized. So if someone sold you a call option, that person needed to put on a covered call trade, which meant you have to lock up one collateral asset for that trade. So no matter what, that asset is locked in the contract, and somebody who was responsible to selling it to you, that asset is already there for you to take. So there's no risk of like anyone not being able to make whole on their bet. Now, a few months ago, Opyn was the first protocol to release partially collateralized options, which meant you can use less collateral than the max loss to sell options. But with that comes added risk that the person would be liquidated. And the liquidation process we use is a reverse Dux auction, meaning like another user will come in and pay a discount to buy the person who sold its collateral and therefore take on the obligation and the risk of that particular contract. So either way, there's like mechanisms in place that whoever is like selling the options, the option buyer, like there's enough collateral there to cover the like any potential like loss of that position.
Mm-hmm. And with that said, Wei, could you also like just give an example so people really understand the terms of the contracts itself? So say if we had like a strike at 200 and they're purchasing a call on that, what is the terms of that trade of someone being on one side, someone being on the other? If you could give a little bit more background of that.
Yeah, absolutely. So if you buy a call option with a strike price of, let's say, 200, and you pay, let's just say $20 for that option, the person who sold you the option earns $20, and that's the maximum amount that the person who sold the option can gain. If that option expires worthless, the person who sold the call option can redeem their collateral and they have the profit that you paid them for the premium of the option. Now, if at expiration the price of the asset is at, let's say, 300, then the person who bought the call option just made a like $200 profit because they can buy the underlying asset from the person who sold them the call for $200 and then immediately sell that asset in the market for 400. So the profit for the person who bought the option is the difference between the strike price and the spot price on expiration. So the spot price on expiration would be that $400 price. The strike price is the $200 that was like made clear when you purchased the contract. And then whatever you paid for the contract, so it was $20, your overall profit from that trade would be $180. Now, on the other side, the person who sold you the option earned $20, but now they have to pay you the difference between the strike price and the spot price, which is $200. So on Opyn, that difference between the strike price and the spot price is paid to you in the collateral asset. So you will receive, let's say it's ETH, you'll receive $200 in wheat that was taken from the collateral that was locked up from the person who sold you that option.
Mm-hmm. Great. And then another question. This is a really good one. What are the average costs to set up a position and close a position on Opyn? And in what sense is it worth using a decentralized platform over a centralized platform in option trading? So maybe with that as well, if you include more about gas fees and gas prices and how that can actually weigh in setting up a trade.
Yeah, definitely. So I guess like two things to distinguish between. One is like the cost of the options premium, and those are set by market makers on Opyn, and really a function of supply and demand, volatility. There's a bunch of factors that go into pricing options. In terms of the cost on the platform, the only two fees are 0x and gas fees. So there's no Opyn fee anywhere. Gas is obviously dependent on what gas is trading at, and 0x fees are a function of that. But there are two transactions if you're going to buy an option. There's one that's approving like Opyn to spend your money. The rest is for the trade to go through. And it's tough to say the exact price, but yeah, it's really dependent on gas. the second part of the question of like comparing DeFi to CeFi, I think anyone that's telling you right now in DeFi that pricing is better is like not being truthful. I think options in DeFi have a long way to go. It's generally cheaper on CeFi, but on DeFi you're paying for for no KYC, and that like privacy and more transparency. So I think if you're looking from a strictly like financial standpoint, it is like better to trade at most times on a centralized platform. But as DeFi continues to evolve, as there's more capital efficiency improvements, more market makers coming in, I think those that pricing will sort of even out. And hopefully once options protocols move to L2, those transaction costs will go down even more.
Yeah, no, it's a good question because if we think about even start of 2020 and looking at DEXs or AMMs, it was like, the spread was huge, or the amount that you're actually losing in a trade was so much more. And it didn't make sense often to, even convert from like ETH to USDT on a DEX over a centralized exchange. But now you can go on these protocols like Bancor, Uniswap, and you can make these trades, and you don't really see that much of a difference in a lot of the really highly liquid tokens and token pairs than you do on a centralized exchange. So maybe I'll add to that question as well. Like, what do you think from Opyn's perspective is needed to bring more liquidity into the market? So, a protocol like Opyn can become more capital efficient than going on to Deribit or a centralized exchange and making these options trades.
Yeah, I think like the biggest thing for market makers, and we've got great relationships with every market maker in DeFi, are like capital efficiency improvements. Because if you're selling options and these options have a longer dated like expiration, like there's an opportunity cost for locking up that capital. So if market makers on Deribit only have to put up 20% of the trade in collateral, but on DeFi they had to put up 75 to 80%, like it's more expensive to lock up that collateral in DeFi. So as DeFi continues to evolve, as we improve capital efficiency for people that are making markets, you'll start to see a lot more flow. I think another thing that will add more sort of liquidity is like we have a USDC liquidity rewards incentive for users that are placing orders on the order book to add liquidity. So I think like that's another way that we can boost liquidity. And then also getting really creative with the mechanism of which like options are bought and sold with like an RFQ system, which is a request for quote. So instead of market makers having to tie up liquidity in these long dated strike prices, like Emma could come to the platform and say, I want to buy a December 23rd or December 31st, like 5,000 ETH call. And you send that quote, it routes to a bunch of market makers, and then you get a bunch of prices back. And that way, market makers don't have to tie up that capital. They can give you a price that they would be willing to sell it to you at, and you can decide whether or not you want to buy. So we're exploring different avenues to add liquidity beyond just market makers on an order book. And the last point I'll make is, in the same way that Ribbon Finance has a bunch of sell vaults, I think adding buy vaults to DeFi will help users want to buy and sell from different vaults. So like if you wanted to come in and buy from Ribbon's put selling vault, like you could interact directly with that vault instead of Ribbon having to go through market makers. So there's a few things we're looking into, and like I definitely don't think liquidity is like even close to where it needs to be for DeFi options to flourish. So we're doing our best to figure out like creative solutions that would work for everybody involved.
Great. And then another question, are these options locked in a decentralized ETH contract? And if so, what oracle do they use?
So we use Chainlink as the oracle, and the options are non-custodial, but they are locked in the contract.
Okay. And then a few more questions also on top of that. So Wade, I have more of a question for you. As someone, as you're focused on a lot on the marketing and communication side for Opyn, how important do you think it is to translate these ideas and everything that you've talked about in, really easy to understand concepts where people can come along and they can kind of like eat it? It's very easy for them to swallow and they know, okay, what actions do I have to take out of this? Is Opyn kind of working on anything specifically to really increase the education and onboarding? I mean, you mentioned the rebranding and really focusing on the Greeks, which, is a great way to even just educate people around, well, what is the different features of options as well, and why are the Greeks really important to setting up a strategy or a trade? But is there other specific areas that you're working on as well?
Yeah, definitely. So I haven't published it yet, but we have an options handbook that very kind of strategically walks everybody through the characteristics of options. So excited to release that. There's also a bunch of Medium articles that we've published on Opyn that go through the basics. We have another article that's a step-by-step guide of every trade you could do on Opyn and like when it would make sense to make that trade. I also think one thing that's very important is, as mentioned, there was a bunch of buzzwords and a bunch of scary words that I know when I was first starting to understand options trading when I was at Merrill Lynch, it was like, holy shit, that's like scary. I don't know if I can do that. But really, like the terms are just big words for simple actions. And I think the more that protocols like Opyn and other options protocols in the space can come up with like easy to understand terminology or analogies, the quicker it'll be for users in DeFi to like grasp the concept, which is why when we talk about put options, I like more or less like to refer to them as like insurance with a specific term in mind, because that's a lot easier for someone to understand than talking about put options with expiries and strike prices. It's just like, okay, if you want to buy insurance on your ETH and make sure that it like you don't lose like anything below the price of 2000, like you have to pay this much premium. Like that's easier to grasp. Um and then like the last thing I'll say is like everyone at Opyn like genuinely loves options, genuinely loves finance, and like it's part of the company culture that like we really want to teach and learn. And that was also part of the rebrand. When you think about like ancient Greek philosophy, like there was such a huge emphasis placed on like education. And so like anyone that drops into the Opyn Discord, like there's no question that's too basic, like no one's going to scold you. There's probably going to be a lot of community members like excited to teach you, because once you develop that foundation of options knowledge, like it unlocks so much power from a trading perspective in this space. And it's like genuinely exciting for everyone on the team to like see people make their first trade and then like watch them ask more sophisticated questions, and then all of a sudden see them teaching other people in the Discord. That's probably the most rewarding thing that um, anyone on the team can like witness. And like that's probably the biggest message is like as we're putting out these educational material, like if anybody has like questions, like don't be afraid to ask them, because like we genuinely just want to like help people better understand how options could be useful to them.
No, great answer. And leading on from that, another great question, and really relevant to everyone listening today, and just the topic and themes of this whole week. But what relevance do you think that options trading strategies have with NFTs? Or is there any use cases that you can think of where NFTs and options could combine? For something that we haven't seen before.
Yeah, I've been seeing a bunch of threads on Twitter about options on NFTs. Um, if I don't know if you guys know who Dave White is, but he's a researcher at Paradigm, and he's posed a bunch of interesting ideas and concepts for like adding options to NFTs. The only thing that I think like someone's going to solve that problem and figure out a way, just in the same way that Ribbon made options more accessible to people in DeFi. Like someone's going to figure out a way where you can buy, call, and put options on like crypto punks. Um, probably the biggest problem with that space is like finding a liquid market, because like that's an inherent problem right now for ETH and WBTC options. But like you'd have even less liquidity on some of these like NFTs. So if you can figure out a way to have a liquid options market on specific NFTs, like given the adoption right now with NFTs, like that's going to be a super exciting like product to watch, because like if you solve liquidity issues, then like anyone could get in, and like it'll be a fun way to learn about options and like pair it with like visually appealing things.
Yeah, and maybe on that further, has Opyn looked into use cases even in gaming, for example? Like I don't know, like something weird, like you go into a game and you have your avatar, and then like part of the quest, it's a strategy that you're setting up in disguise, but based on kind of like the options that you're choosing, you're actually like setting up a full strategy, like a straddle, a butterfly, or some of these options trades. So have you thought of even stuff like that, like completely changing the interface of how people interact with options?
That would be like one of the coolest things ever, is if it was this virtual world where the tasks you were completing helped you like arrive at an options position, or you didn't even know that you were like coming up with strategies like, or on quests that are actually option strategies in disguise. I've like I've thought about it and fantasized about something like that, but it's not something that we've like thought about building ourselves. That being said, if there's any developers and like front end developers out there that like love gaming and love finance, like we've got a pretty decent sized grant program, and like if you can make options more fun and accessible, like it's something we would fund. So like I like where your head's at. That like would be so cool. I would spend a lot of time in that world. I was an OG RuneScape player, if there's any other RuneScape players out there, but um that would be a really, really cool idea, and I'd love to see someone build it.
Yeah. But it's that thing, right? Like with everything, it's like how much does when you think about it more, how much does the computer screen or like this 2D interface that we have limit us? Because it really is. I mean, we're interacting with this interface. This is kind of like the optionality that we have. So sorry, that's a really bad pun, but you get my point, right? But when you're going into a virtual world, now everything's immersive. It's like, well, like you said, you could come up with completely new strategies that literally we aren't even thinking about now, or implementing option strategies or trades into use cases that we can't even think about right now, because our interface is like, okay, tunnel vision, you have to stick within this kind of frame. But if we can really open that up and decentralize it for more people to come in and interact, like just what we're seeing with play to earn now, it's like, okay, onboarding people into crypto as they're interacting with games like Axie Infinity. So yeah, like onboarding people into options or just trading, and being able to provide more economic value even within the game economy. So yeah, that's very interesting. And then before we wrap up, wait, one last question. What is your favorite Greek and why? So for those that don't know, maybe you could give a little bit of background as well about the Greeks in options as well, and kind of why they're important features.
Yeah, so the Greeks are kind of like terms to describe different um like ways to price options, and I can like go over them briefly. They're listed on Opyn's homepage, but like delta explains how options price react to the price of the underlying asset. Theta explains how an options price changes as time goes by. Gamma expresses the rate of change in an options delta per 1 point move in the underlying assets price. I realized that was a mouthful. Vega explains how an options price changes as implied volatility in the underlying asset changes, and Rho expresses the relationship between interest rates and an options price. So all of the Greeks are meant to help traders understand options pricing. My favorite Greek, and I promise this isn't a cop out, but is Athena, um, because partially because she looks so badass, But she's the goddess of wisdom. I think she represents a lot of the characteristics and qualities of like opinionated, strong, like traders. And so that's probably one of the main reasons why she's so prominent on the homepage.
Perfect. No, yeah, I really do like the rebound. I remember last year when you guys kind of, started the protocol and we're coming into DeFi, and yeah, you've completely kind of shifted it since then. So I really like that. But yeah, Wade, I think that's all the questions for now. We don't have any more. So it's been a pleasure having you here for Web3 Fashion Week. And I know that everyone tuning in is like, mind blown. Wow, we need to get into options. So there's probably going to be a flood of new people in the Discord, and we'll drop that link as well. But yeah, thank you so much for your presentation.
Awesome. Thank you so much for having me. And I'd also like to say the waiting room for this presentation was lit. So you guys have done a great job putting this together. Thank you so much for including Opyn, and really enjoyed our conversation, and really cool to know you traded variant swaps in the past, in your past life. So would love to jam on some financial combos in the future. But thanks for having us.
Yeah, no, sounds good. Thank you, Wade. And to everyone else listening, we have around half an hour interim